Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Tech Markets. Each week I take you through the key events that I believe will be driving your investments in the coming days. Certainly moving into this week, we've had two key commodities that have been incredibly important in the financial markets. The oil price has been falling for several months now, as the chart shows. It's actually down for a sixth straight month into the first day of the month, and it has been under pressure, especially in the last week or so, with this key OPEC meeting that's come out, and OPEC decided not to cut production levels, and that had resulted in a sharp decline once more in the oil price. Now, the momentum play in this oil price continues to fall lower, although it is beginning to get rather oversold. It is still looking like the downside is the way to play oil. But oil price is now under significant pressure. It's beginning to filter through into the stock markets, and certainly the oil sector heavyweights are under pressure, such as BP and Shell in the UK, and any markets that have large exposure through those oil sector heavyweights are under pressure, and certainly the FTSE 100 is one of them, and the Australian stock market as well is another. But that oil price is certainly beginning to have a bit of an impact. Now, the other commodity that we're looking out for is the gold price. Now, this gold price again has been building up to a key fundamental event, and that happened on Sunday with the Swiss Gold Initiative referendum. Now, this referendum may have resulted in the Swiss National Bank having to buy up significant amount of gold. Now, the Swiss population voted against the referendum initiative, and that means now no longer is the Swiss National Bank needing to buy gold. Subsequently, the gold price has fallen today. Now, the fall has been very volatile because it's been bouncing around, but I think ultimately when the volatility starts to settle down a bit, I think the gold price should probably start to edge back towards that key November low at 1,131.85. So throughout this week, what we've got on the economic calendar is a significant number of key tier 1 data that the markets will be looking out for. Now, the PMIs have already kicked off on Monday morning. The Chinese PMI and the Eurozone data have all come out and been pretty disappointing, actually. So that suggests that China's under pressure. It suggests that the Eurozone is also under pressure. Now, so looking towards the afternoon, we need to have the US data coming out positively. If the US data starts to underwhelm as well, then that means the three key economic regions of the world are all disappointing. Now, that would certainly not bode well for stock markets, and you'd imagine that investors would start to favour bonds once again. So certainly the key data this afternoon is going to be this US ISM manufacturing data. So then we move on through the week, and we've got the labour market data, and also the ECB coming out with their key monetary policy update, and we'll talk about that in a bit. But certainly the comments of Mario Draghi have been very dovish recently, but it doesn't look like he's going to be able to engage the full-blown quantitative easing that he probably does actually want to do now. And then finally, we're sort of finishing off the week of key data with the Non-farm Payrolls report, which is always a very interesting number. So how are these data points going to be affecting the Forex markets this week? Well, we're looking out certainly for dollar strength. Dollar has been straining at the bit to try and break out to the upside, and it's having an impact on these charts. It's not broken out yet, but certainly the Forex majors have got a positive dollar bias to them. Euro dollar being in a big downtrend, sterling dollar also in a big downtrend, and both of those looking to test their key supports. Now, the key support on euro dollar comes in at 123.57. On sterling, it's at 155.88. That's already been touched today, although we had a sharp rebound on the UK manufacturing PMI that came out better than expected, but ultimately I think that will be a sell into strength and further pressure down on the support again. Dollar yen's been an interesting one today because the Moody's downgrade of Japan has pulled the yen stronger and pulled dollar yen lower, but ultimately once again I think that dollar yen will be a buy into weakness, and it's looking like increasingly as though that there is support around that 117 mark, that I think anything between 117 and 118 I think looks like it's a buying opportunity on dollar yen. So moving on to the stock market indices, well, as I said, we've had strong runs higher in the equity markets in recent weeks, but this oil price weighting and the pressure on the oil majors has got the potential to drive through a bit of profit taking. Now, already this morning we've seen FTSE and the DAX falling away, and it looks like the S&P might have a little bit of a correction in it as well. Now, the first support on the S&P 500 comes in at 2040. And on the DAX, we're looking at, again, well, the DAX actually came within 1% of its all-time high at 10,050, but it looks like it's just pulling back a little bit. But I think on the DAX, there's a nice opportunity for a correction, which would be a positive development, I believe, within the bull market. And I think there's a support band nicely between 9,600 and 9,800 that could well be used as a nice buying opportunity if you see it. Now, the FTSE 100 has been underperforming, as I said, with the fact that you've got large oil weightings, large weightings in the oil majors and also the mining sector as well. But I think that still it doesn't necessarily mean that any correction would be a bad thing, and I think if it could hold on to support between 6,600 and 6,640, then I think that it could still be just a nice little bull market correction. So where does that leave the gold price? As I said, the gold price is under pressure a little bit following on from the Swiss referendum this morning. Result yesterday that we're seeing the first reaction this morning. And I think that gold could well be coming back and testing these key supports once again. So throughout this week, as I said earlier, we've got a lot of key data. Just starting on Monday, just all through the PMI data. This afternoon, as I said, the US ISM manufacturing. Then on to Tuesday, not a great deal on Tuesday, but Wednesday, we're looking out for the service sector PMIs. Again, quite a big component of some of these economies, and it'll be interesting to see how they perform. And then again on Wednesday, we've got the ADP employment report, which has the potential to be a harbinger for the payrolls report on Friday. Thursday, we've got the crucial ECB monetary policy meeting with obviously Draghi's press conference, but also we've got the Bank of England giving its monetary policy as well. So two key central banks reporting their monetary policy on Thursday. Finally, we're going to finish off the week with non-farm payrolls, always an incredibly important bit of data for the market. And certainly as time goes on, the market is looking out for earnings growth in this payrolls report. Earnings growth is going to be the key move that once we see it coming through, then it'll be giving the Fed more of an excuse to start thinking about hiking rates. So that's how the market will be looking at it. Anyway, I wish you good luck throughout the week in all your trading. I know there's a lot going on this week to keep on top of, so I do hope that you can cope with it, and I wish you good luck, and I'll speak to you next week. Thank you very much.